Hey there, Jason here from Show Me Your Debits Chartered Accountants and Business Partners. In this video, I want to actually show you a working example in Excel of how you can use a SUMIF formula to reconcile your bank account and potentially save you hundreds of dollars off your accounting fees. And then if your accountant doesn't want to give you a discount, you tell them to go take a hike and come see me. All right, let's jump in. I'll show you an example.
So welcome to Excel. What I've got here is some dummy information, something that you might expect to see if you have some rental properties. Now, what this looks like here is a bank data extract, because if you've got internet banking, which most people do these days, you can go onto it, you can log in and extract your data into Excel. And if you do it, it tends to look a little bit like this. Every internet bank and every extract is different, but generally what you get is you get a date, you get some type, you get some details, particulars, a reference, and at the end of it you get your transactions, which is most important. So what we want to do here is we're pretending that this dummy data is someone's account information for the year, for the 2016 year, and we want to get it ready for the accountant. So traditionally what you might do is you might print your bank statements off, hand them into the accountant, and they do all the coding and entering. But we're going to do that all for you right now using the SUMIF formula. So how does the SUMIF formula actually work? So what I've done here is I've written down, well, pretty much all the rent income and all the expenses you'd expect to see from owning a rental property, and some funds introduced as well. So what we want to say here is we want to say SUMIF formula range. So what range is? That's where we want the formula to look for our unique identifier. In this case, it's our criteria. So what column are we going to label and put our either numbers or letters or combination of the two to signify to the formula that we want to add all those numbers together? So for instance, what I'm going to say is I want it to look in column H for my unique criteria. Criteria, this is the unique identifier. What do I want it to look for to then add the values together? So for rent income, I'm going to put it into this cell here. Then in sum range, that is the column it's going to look for to add the values together. In this case, it's going to be G. So to recap there, what this formula is saying is look in column H for my unique identifier, which I'm going to put in this cell here. And then in this column here, any number that has that unique identifier next to it, add them all together. So if we close the parentheses, at the moment, it's 0. However, if we want to say that our rent income, we're going to put a 1 next to all our rent income. At the moment, still 0. However, here we go. If we look at this, here's our rent income. Remember what we said, that we want to put it in column H, because that's where it's going to look for it. So we put a 1 next to the rent income here, and all of a sudden, it starts adding it up. We've got some more rent income here, put some there, and some more here. Already you can see it's going down this column here. It's looking in this for all the ones. And then in this column here, it's adding up all the numbers that have a 1 next to it. And as you can see, you can do this for bank fees, insurance, so we'll call that 2, 3, 4, 5, 6. And we'll say funds introduced can be 8. Now, what you want to do now is we can get this formula, we can copy it, and we can just paste it next to all these numbers here. And so now for this one, it's going to look for a 2. This one's going to look for a 4, and so on and so on. So as we can see, this is some interest. So what we've got interest here is 4. So we'll put that there. All of a sudden, it starts adding the interest together. So what you need to do now is we can go down through this entire column, and next to every single one of these transactions, we need to put a corresponding number. And what you'll find then is that we can move on to the next stage, which is reconciling our transactions. So let me just dive in now and complete this first part. So here we are. I've finally finished coding all the bank transactions. So if we look down here, you'll see that I've against every single transaction, I've got a corresponding unique identifier. So now that we've gone through and I've put next to each and every one of these transactions what they are, what next? Let's do a couple of little checks. The first check is to look at our formulas. So if we sum all these up, so these here are the summation of all of our SUMIF formulas. It's what's been added together. And as you can see, the total is 1173.63. That then, theoretically, should equal all of our transactions in column G. And if we do this, if we do a quick summation, you'll see that they're exactly the same. So that means that in our little P&L here, and well, balance sheet, if you want to be technically correct, we've also we've caught everything that needs to be caught. So now that you've gone through and you've coded, for want of a better word, you've coded all your transactions, you now need to reconcile them to the bank. And there's the one simple way you can do this. Let's just say your opening bank balance at the 1st of April, you've got a 31 March balance date, at the 1st of April was $200. Your movement for the year is going to be what you've picked up from your formulas. So what you'd expect is your opening balance plus your movements for the year, which we've already worked out at 1,173 cents, to give you a closing bank balance of 1,373. Now, theoretically, if this is all worked out, if you've got your bank statement in front of you, that is what you should see on your bank statement. And if that is the case, then congratulations, you've actually just gone and reconciled a bank and pretty much done all of the legwork that an accountant will do when preparing your accounts and tax returns. So, I mean, if you're someone that has 1 or 2 rental properties or some really basic income that's not too complicated, that doesn't, wouldn't require you to use Xero, I mean, something like this is easy. It's anyone can do it. It just takes a little bit of practice, and the key thing is just to understand the language and what the SUMIF formula is trying to do, where it's looking at and what it's looking for. And if you can master these key traits and you can just get a few little good checks in place here, there's no reason why you can't turn around to your accountant and say, hey, look, I've now reconciled my bank. Everything's done for you. I just need you to finish it off, prepare a set of accounts, or do a tax return for me. And theoretically, that's going to cut out half the time that they spend doing this, so you'd hope then that they would lower your fee. And if they don't, you know what to do. You can tell them to come see me. So anyway,
Hey guys, thanks for watching my video. I hope you got a lot out of it and it made some sense to you. The key points to note are that you can use the SUMIF formula to fully reconcile your bank and essentially do half of the groundwork that it takes to prepare a set of accounts and do your tax return. And what I would hope to get out of that, if you do decide to start reconciling your own bank, is that your accountant is going to cut your fee because they're not spending all the time doing all the coding and inputting all the data, or they're going to charge you the same, but they're actually going to give you some helpful advice and they're actually going to be useful to you. Otherwise, tell them, see you later, you're going to come see Jason at Show Me Your Debits because he's actually going to help you out. Anyway guys, I hope that helps. I hope you learned something. Sing out if you've got any questions and watch out for my next video in this series. Cheers.